Supreme rising, beautiful people. Supreme rising, beautiful people. Let's go. How your mama doing? How your daddy doing? Let's go. There we go. We are in there. We are in there. Supreme rising, supreme rising, supreme risings. Tripping. What's happening, beautiful people? What's popping? Supreme rising, supreme risings. I'm extremely excited. Just got a call last night from one of my good guys that everybody sees me working out with in the mornings out there in Orlando. My guy Jerry, he landed last night. So I got to go see him early in the morning, right after class. I got to go see him. Jewelry all tangled up. Can't have that. My like is in. That's right. Put your bid in. If you are joining this live, like the live, thumbs up the live, show some love on the live. You know what I'm saying? Show the love. Why this thing is not registering? Let's refresh before they start. Oh, it ain't even loaded all the way. That's why. We've been having some technical difficulties this morning. We got a lot of wind outside out here on the West Coast. We got a lot of wind. Alice, what's happening? Yo, G, what up? Keenan, what up? Devin, what up? What's happening? What is happening, Nicole? Let's click it again. Oh, we should be there. Good, we in there. Y'all see gold jump off from 28.69? Yo, y'all see gold at 28.69? G. Willikers Batman? G. Willikers Batman. So, let me cut the music down. Got some blues today. We're gonna get into our frequency. I want to get some flutes in the background. There we go. Bow. I'm gonna reveal the only 5. You not finna reveal Nathan. Skip on your ass. Let me know if the music is good or is it too loud. You gotta set the vibe. I want them native flutes in the background today. And the reason why I want the native flutes in the background, because today, it's going to be a little bit more advanced, but also basic enough for the new people to truly understand what do we mean by a weekly time frame, a daily time frame, a 4-hour time frame, a 1-hour time frame, going to the 30 minutes and the 15 minutes, and what each time frame characteristics you will need to literally trade on those time frames. Put an 8 in the chat if you understand what I just said. Meaning, I'm going to show you today what is the difference between the characteristics that is needing for a 4-hour time frame entering into a trade versus entering in a trade on the 15-minute time frame. So when a lot of you guys don't understand whether you're a day trader, whether you're a swing trader, whether you're a scalper, whether you're a position trader, like you have to possess all the characteristics as you're going through this journey. So today I'm going to teach you how you can start off as a scalper and then choose another time frame and immediately switch from scalping a trade to day trading a trade, going into an even higher time frame, and versus day trading a trade, end up swinging the trade. Sleeping, making money, waking up, seeing that the trade is still going your way, to no longer wanting to just swing it. Now you're looking at the weekly, now you're looking at the monthly, and now you're ready to position yourself and hold these trades. Put some fire in the chat if you're excited about that today. And we're going to calculate that, correlate that, and try to end up in the last, because I'm going to give you guys about 35, 40 minutes because I got to go to the other side of town to see my guy real quick. So here we go. First thing first, each time frame, that's what each candles represent, whether if it's a red candle, green candle. So if I'm on a monthly time frame, that candle right there represents February. You have 23 more days left in February. So that candle has 23 more days to do whatever it's going to do. Put a 1 in the chat if you understand that. Because if you're brand new, this is some valuable information. You should have a notebook and a pen, and you should at least write it down while listening and watching and participating at the same time. Because I'm giving you 3 forms of actual education. I'm giving it to you in audio. I'm telling you to do it manually, and then we're going to live action do it towards the end of the class. Like, this is why most people come and say, yo, Mr. H, I was in your class. I don't even know you, bro, but I made money, and I don't even know how I made money. But, bro, can you teach me how you did what you did? This is the sauce. So this is a monthly time frame. Each candle represents a month. So now if I drop down to a week, because it's this week, we want to make money this week. So therefore, we're looking at today is Wednesday, February the 5th, 4:07 on the West Coast, 7:07 on the East Coast. You know what I'm saying? Yeah, I'm saying, like, we up early. Most people just got out of early bag. Shout out to my boy, Mr. Lugo. He is back. He is healthy. He is wealthy. That's what matters. That's what matters. Health is wealth. Health is wealth. What up, Anthony? What up, Amir? Microwave. Linda, what's happening? Manuel, what's up? Bethany. Yo, Crystal. Twan, my guy. Marcus, what's popping, baby? What's popping? So now we go to the week. And as we know, at 2,869, gold is at an all-time high. Gold is at an all-time high. So you don't even really have a weekly roof right now. But as of right now, the all-time high is 2,869. So because she don't have a wick, you still need to cap her. Yo, where's my symbols? They tripping on my what's the name right now. Where's my symbols? It's okay. I know where to get the symbols from. If you're brand new and you on TradingView and you don't know where I be getting all of my lines and stuff like that, you go into the little toolbars that you have on the left-hand side, and this is where everything is at. You'll see, the first thing first, you'll see a little trend line. Click the arrow. All of these are going to pop up. To be able to save them, you need to have them starred. So I have a trend line starred, horizontal line starred, which is what I use for support and resistance. And as you start scrolling down, you'll see whatever else you like, you need, whatever tools you need. I go to the fib. I have the Fibonacci retracement starred. I go to the brush right here. I have rectangle. That gives me the highlights. I have path. That gives me the pointer to show you. And then I have circle, which allows me to highlight and pinpoint and target a bullseye area. That's what I use. So I don't know why I don't see it over here, but we have them. So either way go, that's how you do it. So let's go. Now that that is done, you can watch this video 100 times and truly understand exactly what I just told you. So we're gonna add the boom, boom, boom. Make it yellow. Change the coordinates to 2869. 2869. Boom, yeah. Actually, 98. But yeah. So there's your weekly high. 286998. That's the highest it's been. We'll get into it. Actually been a little higher. Right there on that wick. We'll go right there on that wick. Yeah. There we go. We're in there. It actually went to 28. Damn, she went to 28.78. She went to 28.78. So now let's go get that weekly bottom, that triple bottom, the most common bottom of the week. And why do we do that? Why do we do that, beautiful people? It shows you where she took off from 2 years ago. 16. Yeah, if I get all native on y'all and I start doing my thing, don't mind me. Yeah, it's disrespectful. Everybody that is in the live, in the class, you must hit the thumbs up. I'm telling you, you should hit the thumbs up. Show your boy some love. Show your boy some love. So here's your daily candle. So we want to find money today. So as I start understanding that I like to day trade, so that means I like to trade basically from the 4 hour. So that means I like to trap the daily time frame to get the highest price of the day and then the lowest price of the day. And right now at the lowest price, there's no sign of rejection from sellers. That means when this candle closed, next candle open, it just shot up. It didn't go down, didn't come up. It didn't leave you any data saying that it has the potential to go down here and then come back up here. This candle opened and straight went there. Put some fire in the chat if you understand that. So now I'm on the daily and I go, yo, the daily candle as of right now that has 9 hours and 47 minutes, it's just now starting to see some rejection. Let me say that again. When we got on class, she was sitting at 28.69. It is down 10 pips, and we're just now seeing rejection from that daily candle. And it had 9 hours to go. So we're going to take it where she blasted off from. Watch this. And then I see the daily floor price. You see that? It's 28.40. 28.40. So when I see 28.40, it lets me know that's my daily floor. And what do we do from the daily floor, beautiful people? Type it in the chat for those who need to know. What do we do from the daily floor? Enrique, what up, baby? We buy. Remember, fam, the like button is yes. Thank you, Marcus. Thank you, Marcus. Thank you very much. Very much. Cost you nothing to hit the thumbs up button to get this sauce. So now this is where it gets interesting. We have our weekly roof, our weekly high. Let's make sure we tag that so everybody knows. Now we go into our 4 hour. Now we're getting ready to start wanting to press the button. And the first thing I see is a doji candle, meaning I see sellers have came in, which shows me this is like a 10 pip wick. But if you take it from where it's been, let me see the gap. Let me bring it back down. Let me bring it, there she goes. Make sure there's no gaps there. Boop, yeah. 28.76. So she's actually coming from 28.76 and she is sitting at 28.69. So she is literally like 70 pips, almost 72. Let's see, yeah, she's almost 76 to 69. She's almost 100 pip in a pullback. She's almost there. So where do we find money? I go, yo, I like to find gaps. So I already see my daily floor right there. I see a little gap right there. So that makes me go, where's my highlighter? Remember my highlighter, beautiful people. Here's my highlighter. I always take the highlighter and I put it at the bottom of the candle that created the gap to the daily floor, like that. Boom. Come on. Oh, this is a marker. Get the fuck out of here. Get out of here. Boom. Y'all see it? So that gives me 41 to 44. That gives me a buy at 41.44. And that's the exact same buy that Alex just gave us in early bag. Now you can immediately see it, where he gets it from. Your next area is the gap here, 28.76 to 28.73. Boom. There's your first data of a sale coming into play in an all-time high. 28.76 was the first area where the market rejected. There's like very few red candles. So it's like it rejected a little bit here and just kept on going. It now is rejecting here, and now we'll get more data. So here we go. Now you have your buy zone, your sell zone. Watch this. Let's make this one red. Let's make this one red so you'll know the difference. Sell zone, buy zone. Let's even dummy it down. No. Now watch this, beautiful people. Yo, put some 8s in the chat for the nice little flutes in the background. That's the vibe right now. It's the vibe right now. So here we go. Now, as I see this and I go, yo, where do I get in at? Because it's already dropped here, so it's sitting here. So we need to either wait for the retracement back up in here, and then we start saying, do you want to take the aggressive, or do you want to take the middle, or do you want to take the modest? This is something you must decide, because only you know how much money you got in your account. Nobody is keeping track of how much money you got. You can tell people, but it's up to you. So for me, I know it's an all-time high. I start at the middle. You see? I'm going to start in the middle. I set my alarm, 28.74. Boom. That's for the sale. I set my alarm at the 40, we'll do 42. 28.42. In the middle of the 28.44 to 28.41. Literally just that simple. Literally just that simple. Boom. So now I got my parameters. Now I know what I want to do. Most of the time, I'm a day trader. So I let the market come into my zones, and then I trade in those zones. If I get a pull back up here, I'll be ready to trade gold all the way down here. Because especially if Bitcoin is sitting at 98,000, I think it'll drop a little bit more, which will push gold probably back up a little bit. And then we should start seeing Bitcoin fly back up to its normal range, 101, 102, 103. And then you're going to see gold trickle back down here, back down to the daily floor. Now, here we go. Why am I teaching you this? Most successful traders trade from the 4-hour. So by trading from the 4-hour, what that does, that gives you at least 4 hours to analyze the market, participate in the market, and receive profits or get clipped out of a trade. But it gives you enough time to say, yo, I'm in this trade from the 28.76 sale. That's a 4-hour candle. So imagine I personally could be making money if I'm in it, no income claims, literally for almost 3 hours, because there's literally 1 hour and 40 minutes left. So you're talking 2 hours and almost, 20 something minutes? You see? So for 2 hours, almost 2.5 hours, close to 3 hours, you would have entered in this trade, and all you would have seen is your money just going up, 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 up. It's down 120 pips. So that means if you would have just literally put $1 right there, that's $1,000. That's $1,200. That's a $1,200 candle right here. If you want to know the math, that's a $1,200 candle. 120 pips on a standard lot size for you guys to know. So this is what I want to teach you guys. Imagine if I say, yo, I don't have time right now. I have to go to work here in the next hour or so. So therefore, I don't have time to wait for this hour candle, hour and 39 minutes for it to play off. So that's when you start trickling down to your 1 hour. And then you start seeing in the 1 hour, yo, it's riding a trend. Once it gets to this EMA, it's proven to like bounce from this trend. But if you start looking at the trend, you can draw the trend line. Oh, got to go back up here and grab it. You can draw the trend line from where it started all the way to here. You see? Bang. It's sitting on the trend right now. So then I start saying, yo, do I want to take a riskier buy to my sell? Do I want to take it on the trend? Or do I want to take it on the EMA 9, like right here? So that's when you start also giving yourself more aggressive zones to kind of find a retracement to get to your higher zones. Put some ones in the chat if you understand. Put some ones in the chat if you understand. Look at that bounce. Watch that bounce. YouTube crashed. Why? One second. There it is. Yes. Make sure that it's charging. Yeah, we good. We good. You understand that? You understand that? So now I'm like, I know I have zones to play, but my patience, don't have enough patience. So once I leave the 4-hour time frame, I'm no longer considering myself a day trader. Now I'm looking for scalps. You see? So now I'm looking for, do I just take a quick sell down to here to back up here? Because now you're just looking for plays. Put some 8s in the chat if you can understand that mentality, and then you start saying, yo, I have zones already, but why did I take 2-3 trades before it got to that zone? And all I had to do was wait for the zone. So anything that you take in between your zones are risky. And now you must understand is how much risk do you have? What is your risk factor? What is your risk factor meter? You see? So how much are you willing to risk to go to the buy zone or go to the sell zone versus waiting for the sell zone or waiting for the buy zone? Now, if you see it doing what it's doing here and it does not take off, you start traveling down to the 30 minutes to start saying, yo, why is it not moving? Now you're seeing a nice little rejection right here off the trend line, right here off the EMA 9. Now you're seeing it. So imagine if I start saying, yo, all right, guys, here it is, and we're going to mentally trade this trade. You can start pressing the buy button right here. So I go, all right, let me mentally do that. So I go around here, I go get me a horizontal line, and then I mentally see if it's going to respect, bang, the 67, right there where it's at, kind of like where it's at. We're going to change it green so nobody gets confused. To the 64. Boom, from this little wick right here. So that right there is now an aggressive attempt to catch a retracement back up to your sell zone. Put some 8s in the chat if you understand that. Put some 8s in the chat if you understand that. And now you're saying, I'm not interested in watching 60, 70 pips or 100 plus pips to a sell zone or 200 something plus pips to a buy zone. I'm not interested in that. I'm trying to make money because if Alex said it's going down here, Mr. H said it's going down here, yo, it's going down. So how do I get this money? If you do this right here, that's saying I want to instantly just go with the trend. So you must be willing to take the buy on the trend line, go in a drawdown, and literally let it split your lot size and buy here, and then let it pull back up. But because you're taking a very risky buy in the middle of it, you can get caught on a trend line breaking type of structure where it literally comes over here, looks like it's going to buy up, but it retests this 30-minute trend line and start heading back down. And let me show you what that would look like before I start breaking it down. Boom. It'll come like this. You'll split your lot size. You will pull back up. Boom. It'll show you profit. You will say, oh my God, it's coming all the way to the sell zone. It rejects right here at this structure. Boom. And then she shoots down here because of news. Do we have news today? Let's go check. Today is the 5th. Oh shit. Yeah. 8:15. Yeah. 8:15. In an hour from now, like an hour and 10 minutes from now. Like that, almost, about 45 minutes from now. You got non-farm employment change, ADP. So ADP, they rapes us. They rape businesses. Like, I never understood payroll tax. Like, why do my company need to pay you a tax to write a check for a worker that works for me, and then you turn around and take more taxes from them? I can just write them a check out of my own checkbook. But that's too much like right. That's too much like right. I don't know if you guys are in the business, but I'm in the business. They don't allow you to just to write a check to an employee that's on a W-2 just straight from your checkbook. They don't allow you to do it no more. You'll get in trouble at the end of the year. So it's crazy. They want you to get a system of ADP, put it on payroll. You have to tell them how much is the check, and then they tax you on how much the check is that they need to write after you told them everything. Listen. The buffoonery. All right, so here we go. So now we find ourselves down on the 15 minutes. So this is where the knowledge comes into the play. So here it is, beautiful people. If I'm engaging right now. I say, you know what? If I go back to that 4 hour, what I had on the 4 hour was a candle that is down 120 pips. It's going down. So do I want to be the guy in the middle of the road saying, hey, let me stop this. Hey, stop, turn around. That's a 4 hour push. Look how it hit that little zone and it pushed back up. You see that? So now it lets me know that little spot was extremely valuable, the 67 to the 65. It's valuable. You see it? It's valuable. So when you get over here on the 15 minutes, you'll see where the pullback is happening. You see where it's happening at right now? So now you start saying, yo, you got 2 minutes and 35 seconds left in this candle. 4 hour candle, dropping, but yet pulling back and sitting as a doji. If I buy right now, I have to say, if I buy right now in the next 2 minutes, I want to see that candle close over here. If that candle closes over here, I need to watch the following candle try to break this structure here. And if this candle breaks this structure, and then I want to say, yo, I got real good profits, what makes me go from a scalper back to a day trader? What formula you use is when I like what I see on the 15 minutes and I feel like it's coming into another consolidated area, whoever pressed the button should be green. Once it get here, most people start saying, man, I'm going to take my money. How you switch your skill sets from a scalper to a day trader, you start going back up in the time frames. And now when you see the 30-minute push, you immediately see a lot more clearance than you see on the 15 minutes. You see the difference? 50, that's 30 minutes right there. That's an hour right there. That's right there, almost an hour and 30 minutes that this particular candle has to break through right here to clear this area to start fighting with these guys over here. So you got a set right here and you got another set right there. And all you trying to do is be great and get to your sell spot. You see? So here she is. Here's her push. She literally pushed from right here from a 28.67. She's pushing up. So what makes me not close that is go to the 30 minutes. And when I get to the 30 minutes, I immediately go, yo, I got 32 seconds left in the 30-minute candle. Let me see where this next candle opens. Because if it opens up like over here and then retraces back in here, for those who missed it, that will be your re-entry. Bing, bing, like this, you see? And as you start going in higher time frames, your mindset and the characteristics of the thought process that you're having while managing your trade should also upgrade with those time frames. See that candle? See that candle? It popped right here. Pop right there. Bink. Now it has to reject from here. So you're still saying, yo, go back to your 15. The 15 is over the EMA 9. You see? It's over the EMA 9. So as it pushes, It finds rejection here. You see the rejection? There's your rejection there. It'll show you clear as day. I can take a red line and I can put it right here. Buyout. And what this red line represents is the market wants to reject from this area. Watch it right here. See that good push? That's a great push. That push came from the 30. That push came from the 30. But look at the rejection. Look at the rejection. I just put that line in your face. Why did it reject there? How did I know it was going to reject there? Because on the 30 minutes, it's sitting right here. You see? On the 30 minutes, it's sitting right here. So I go, yo, in the next 28 minutes, maybe it needs more buyers to get past this consolidation. Maybe it needs to come down here, grab more buyers, and then shoot back up. You see? So I go even to a higher time frame to see where I can see that. Look at the 1 hour. You see how the 1 hour shows you it's even better. Put some fire in the chat if you guys are understanding this. Put some fire in the chat if you're understanding that this is grade A sauce. And everybody who just pressed the buy button off of this little trend right here, like that's a strategic way of trading. Trend line rejection, trend line breakthrough, or you start literally having zone to zone to zone to zone to zone. Watch it, beautiful people. Watch it. Watch it. It's a beautiful thing. It's a beautiful thing. It's a beautiful thing. And remember, she's back sitting at the price where when we started class. So here it is. She's at 28.70 now. 10 pips above the price when class started. And now she's finna be officially breaking out of here. Let me move the red line to the next level of rejection, which is here. So when you take this trade, you're literally saying, yo, bro, I'm trying to get 10 to 30 pips. You see? So imagine if I put a standard right there, that little push gives me $100. That little push gives me $100, and I say, yo, you can do that 10 times. That'll give you $1,000. And you can do that within maybe 5, 6, 15-minute candles. You know what I'm saying? You can spend a couple hours on that and get you $1,000 just from putting a standard there and just taking it. Bang, off the trend. Bang. There's $100 right there. $100. $100. You do 3 of them. That's that. If you just ride it up, oh, that's big boy bread. That's big boy bread. So here it is. Imagine, look. So why I don't like trading in the middle? Because the simple fact, it takes me from thinking about a 200 pip move or 150 pip move, which is the average movement of gold on a daily basis, to just nickel and diamond on gold. Y'all understand that? So when you find yourself trading from that 15, from that 30, and you enter in on that time frame, this is you saying that I'm nickeling and diming in the foreign exchange market versus selling the whole pack versus buying the whole pack. Yeah, Shay, I'm telling you, like a lot of people get messed up in these little pullbacks and these little retracements right up in here because this is not your entry space. Your entry space is here or here. You have another area of rejection that's going to happen right here. You see, so let me show you that. Right there. That's another buy zone where buyers are proven to be there. Boom. So I can openly say like, yo, look at that candle. If that candle here in the next 10 minutes breaks this trend, pulls back up, then you can start saying, yo, she broke past a 15-minute trend. But look how long she's riding that trend. Go to your 30 and you start saying, yo, she has not broke the 28.70. She's not breaking it since she dropped back down in there. This candle closed in there. So for literally 30 minutes, 1 hour, 30 minutes, now new 30 minutes, you're 2 hours in to this space right here. You see? So now you're just going in profit, back in the negative. In profit, back to the negative. In profit, back to the negative. If you got an early entry, then you're just hovering the basic profit. $18, $20, $18, $13, $12, $9, $6, back up $14. And you're just like, yo, man, I just need a quick 50. If she blasts out of the zone, she comes to the higher zone. It's just that simple. But you got to allow it to happen. You have to allow the breakthrough here, and then that's your proper retest there. Boom. 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 Buy zone is new sell zone. Boom. Blasts through. Or she could double up. Complete it. Make a W right here. Hit the modest. Come right back down. You see? You see how it works? Boom. Hit that buy zone again. Comes right back to that back at the top of the aggressive. Or come back to middle to modest. Make the M. And that's how you get M's and W's in the market. Boom. Retrace. Like that. That becomes now, boom, a breakthrough. That's your sell zone down to your buy zone. Sky is the limit. Put some fire in the chat if you understand that. Put some fire in the chat if you understand that. It's a beautiful thing. It's a beautiful thing. I'm telling you straight up. It's a beautiful thing. So look at it. Here she goes. Here she goes. Here she goes. So what I just showed you guys, those who like trading zone to zone, you miss out on all of these little headaches and anxiety trades. These are anxiety trades. This is you trying to assume that she's going to go to your sell zone or assume that she's going to come to the buy zone. You're assuming, because the only way you really truly know is when the candles confirm themselves. And what happens is, if you do not take the 10 pips that you were up, now you're back into a 10 pip drawdown. You see? So it has to be in and out if you're going to be scalping, because that's what scalpers mean. I'm jumping in and out of the market. The fastest as I get in, fast as I get out. So here in OBG, because we're pretty good at what we do, we tell you, if you're going to scalp, look for minimum 10 pips to 30 pips. And if you're scalping trades, that means you're entering into trades 3-4 times. And if you're trying to hit 30 pips, imagine you can go 10 pips, 10 pips, 10 pips, if that's the style of trading you like. Or you can say, hey, I don't have time or the emotional capacity to literally sit here and consistently buy and sell, jump in and out of a trade where if I just was in the trade, I could hold the trade. Then your mindset should be, I like to trade from zone to zone. Forget all of the noise. I trade from zone to zone. There's a lot of news popping off. So therefore, I don't want to get caught in the middle. When a news pushes it here, I trade from that zone. If news pushes it down here, I trade from that zone. And because we're in an all-time high area, if this green candle starts pushing all the way up here, the trade is no longer valid. It's no longer valid. If a big green candle pushes, if these little candles right like this push up in here, the trade is extremely valid. So that's how you know. If you're in an all-time high and there's nothing but green candles on higher time frames. Look, straight green candles right now. If a bigger green candle starts approaching that, the trade is no good. If little bitty candles like this starts approaching in that sell zone, take that sell. That's how it works. That's how it works. Look at this. Let's go. Look at that. That's beautiful. That's a beautiful trend line. Little rejection right here. And it's just to give you the analysis. I personally never take these type of trades. Never take these type of trades. What I wait for is the market to what? Break out of the consolidation. And I know anything in this area is just going to go back and forth. So if I press the buy button right now, I know for a fact it's not going to give me like 80 pips. It's not going to give me that. It's going to give me 10 pips, 20 pips, 30 pips. So what I would have to do to make that satisfying for me, I would have to use a bigger lot size than what I'm willing to risk on a quick trade in the middle of my zones. And when you write that down, you start looking at your trading plan. Nothing in your trading plans tells you to take trades in the middle of your zone. So when you guys are basically barely escaping the day with your profits is because you started taking extra trades on the sides in between zones when trades were becoming valid or trades were becoming active or not active, or just pin trades are sitting there and you just like, well, if it's got a pin trade of a sell zone, that means it needs to buy up. So I'm going to find a quick buy to ride it up to the sell zone. And then you miss and then it just starts dropping on you and you're just like, what the hell? Yeah, because you shouldn't be taking that trade. You're trying to assume. And when you assume in life, does not matter who you are, where you are, what language you speak. That assumption, the first three letters, you always make an ass out of yourself. You always make an ass out of yourself. So that's why when you're on smaller time frames, understand that scalping is 10 to 30 pips. Anything over 10 pips, 20 pips, even 30 pips, you're just being greedy. So imagine you went up 10 pips, now you're down 10 pips. So that means if you just put 20 cents in the market, you're up $20, now you're down $20. That's what this candle is showing you on the 15th. Watch it, watch it. Watch it, watch it, watch it. And then I got to get up out of here. But we have our zones. Let me give you guys the zones again. 2876 to 2873 is going to be a sell zone. I have my alarm set at 2874 in the middle. But I would have to see very small candles approaching this. If I see a big green candle because of news, I am not hitting that sell, to be honest with you. If I see a small rigid candle and it starts shaking and like twerking right here, oh, you bet your ass we're going in from the middle to the modest, and if it hits that modest, we're going in on it. Just like that. I have a little data. You see? So now there we go. So does everybody understand? So when I'm in this trade from a 15 minutes, and it starts pushing towards a consolidated area, like how it pushed up here. You started buying right here. It went up 10 pips. Now it's back down 10 pips, actually down 20 pips from where we entered into class. The price is down 20 pips. So that means you have to see if the market is going to close over here, retest that area, drop back down to these little earlier buy zones. You understand that? This is a safer buy. Let's put that there for new people. Can I say safer? Or do I need to put an I in there? Main reason why I'm doing funded accounts. What you mean? What's your question? Yeah, that's right, Paul. Because imagine, man, if you get into these little risky ass trades right here, that's why I said let's do it mentally. If you get into these little trades right there, they're going to drive you crazy because you're going to be down 20 pips, up 20 pips, negative, like even. You're going to say, well, the next time, I ain't got time. I've been negative for 2 hours. So therefore, next time it just gets to my break even, I'm going to close the trade. Now you're not even thinking positive anymore. It's just like when you open up your account and you have an amount in there, you put $1,000 in there, you start losing your ass, you're down to 600. Now the whole goal to take the 1,000 to 5,000 is not even in your mind no more. Only thing you're saying, if I can just get back to where I started. Put a 1 in the chat if you've been there. You done put 500 in there, now that motherfucker down to 275. You ain't thinking 500 to 1,000. You just thinking, if I can just get back to the 500. 44, 41 is the buy zone at the bottom. 28.44, 28.41. I have my alarm set at 28.42. Where's my alarm? It's right here, but yeah, 28.42 is my alarm. 28.42 is my alarm. You see? So many people can relate. I think I'm going to leave this here. If you're in class, you're going to know what this means. I'm going to run this. We're going to run this, and we're going to see how this plays out. We're going to see how this plays out today. I won't touch my charts, but we're going to see how this play out because this is like an extra class, to be honest with you. This is an extra class. So yeah, we're going to watch and see how this little guy plays out. I'm going to be selling from here if I get the candle structure that I like going into there. But I'm also excited to take this riskier buy. But 9 out of 10, if it comes here, you're going to see a big red candle because of news. And if I see that big red candle, this is not valid. So let's put that there. It's immediately not valid. This is just a solid area where buyers are sitting. Buyers are sitting here and buyers are sitting here. I like this area because it's a safer buy. So watch this. Because there's always money in the market. There's always money in the market. Whether it's you winning or you losing. Best risk versus reward buy. Why they hating and not showing it to me? Why they hating and not showing it to me? There it goes. There it goes. There it is for y'all. Everybody got those? Everybody got that? So again, make sure you like the live. Make sure you share the live. Make sure you rewatch the live. Also, make sure you drop a comment on the live. We had a really, really good turnout this morning. So what you guys, to do a quick little recap, what I showed you is if you did a top-down analysis from the weekly to the daily, trap that daily, find the gaps on the 4-hour, find the 30 pips in those gaps, and those are your zones from zone to zone. And that's how you trade from the oversold market to the overbought market. If you're trading in the middle, that is consolidation. Money goes up, money goes down. We do not trade sideways. So to show you what I was showing you, you would have to be on a smaller time frame to find the 10 to 30 pips because you won't see it on the higher time frames. You won't see the structures to be able to do it successfully. You see? So now it is pushing into that little risky consolidated area where if you didn't buy from the trend, now she's down here and this is where your next level of buying because that is the consolidated area. So I always tell myself, when I see the market moving in a consolidated area, I do not participate. You see? I don't participate. It would have to break out of here or break up in here. And then this is when I would start saying, you know what? I don't mind taking a riskier buy because it could easily blow through that fucking all-time high. You see? That's why I say, I won't do it here. I'll do it there. I won't sell here. I'll sell here. You see? Because it's confirmed that it's out of this area. Because any other time in the history, it shows that if you sell here, yo, it's going to come back up here. If you buy here, it's going to come back down here. It's been doing it for hours. So let it break out on the top side, retest that little consolidated area, and now you have your 60 pips versus the 10 to the 30. You have a 60 pip run to your sell zone. 60 pips with a standard. That's 600 book. Let's what's the money on Dragon Ball Z? Zennies? That's 600 zennies. What you say? Please, the zones again. My network acting up. Well, you're gonna have to get some push-ups and get off of that Obama network, bro. Oh, you gotta get some push-ups, bro. So yeah, wait on those two signals. Here, go up. If it's gonna break out here, just be patient. Wait for the sell zone. If it's going to pump out here, get excited to get a really good area for a buy or a really good area for a risk versus reward buy. I love you guys. Y'all make the rest of your day the best of your day. Y'all make the rest of your day the best of your day, beautiful people. Much love. Deuces. Deuces.